Here is Maria Bartiromo with more of her interview with DoubleLine Capital founder Jeffrey Gundlach.
What about the policies coming out of this White House? You're talking about tax reform. We're talking about the possibility of even something new now on health care with the president's executive order this past week. Do you think the tax plan moves the needle on economic growth?
It would if it gets passed, yeah. That's the big if, though. I think we're sort of 0 for 3 on major legislative votes so far.
You're right.
And, you know, the thing about Trump, which is so interesting, is he is interpreted as such a disruptor and such a doer, you know, but there's been a lot of gridlock underneath Trump, because it's not just the Democrats against the Republicans anymore. It's the Democrats against Trump and the Republicans against Trump. So in essence, having him there has almost increased the, you know, the dysfunction. Yeah. The dysfunction in Washington. So maybe the tax plan, I think he's up to something that might work when you push a you know, increasing the standard deduction and try to get a middle class tax cut. I think that kind of works, is bring people together. We'll see if it happens or not, but certainly getting a corporate tax rate down does wonders for justifying the valuation of the S&P 500. So I've been allocating capital, and have all year. I was going to say to you. All year I've been advocating non-U.S. markets. Not that I'm bearish on the U.S. exactly, and I really haven't been, but the valuations in emerging markets are incredible compared to the United States. The valuations in Europe are noticeably lower than the United States, but the emerging markets follow this amazing trend where from 2000 to about 2011, the movement of emerging market equities mirrored almost exactly the percentage of GDP that emerging markets make up. So if you looked at the ratio of emerging market capitalization to the world markets, it was moving up right in the same trajectory as their GDP share, which was going up pretty smartly.
Coming from rock bottom places.
Yeah, but once quantitative easing came, suddenly it disconnected. The share of emerging market GDP continued to rise, but the market started to go down or sideways. And now there's like an alligator jaws between what had been a very, you know, one on top of the other trajectory. Now here's the GDP and here's the market. It has to do with commodity prices went down. They peaked in 2011 on a local basis. And it has to do with the dollar went up. The dollar went up a lot from 2011 until January of this year. The dollar index went from 78 to 103. Yeah. That's actually was at 72, I think, at its low, but to 103. Dollar isn't going up anymore, though.
Right.
And I still think the next big move in the dollar is down as expectations that the Fed is going to execute their plan diminish. So that's all supportive of relative outperformance of non-U.S. markets.
Before you go, real quick, did you see what happened to Bitcoin this past week?
Over 5,000.
Whoa.
Yeah.
I know you said you're going to have this charade, I don't know what you called it, go on without you, but like...
Oh, it's a speculation. The thing is this, Bitcoin had a tremendous move, and there's a lot of believers in it. I got an email from my 86-year-old mother in August when Bitcoin was first at 4,500.
She was talking about Bitcoin?
Her cousin's daughter sent her something, said, put all your money in Bitcoin. This is the greatest thing ever. Get in on the ground floor. And my mother said, what do you think of that? And I said, these types of advertisements tend to come out after the big move has been made. But Bitcoin is either worth $1 million or zero. It's clearly not an investment. It's clearly not a currency. Bitcoin a month ago was at 3,500. Now it's at 5,000. So it's changed by about 50% in a month. That's not a currency. I've seen it drop 10% in an hour. So how do you buy a car with something that's changing value 10% while you're filling out the paperwork?
Yeah. Well, I'm sort of feeling like your 86-year-old mom is sort of where the shoe shine guy was back in the day.
Joe Kennedy is
exactly.
The legend goes. Yeah,
exactly. This is a teachable moment, isn't it?
I famously turned bearish on Apple back in 2012 when it was at 600 and change. That's pre-split. And it went to 700, but then I was right. It went down below 400. And one of the reasons that I got there was that kind of Joe Kennedy shoe shine boy moment. One of my mortgage traders was getting his hair cut. And his illegal immigrant, drug addict hairdresser said she was going to buy Apple. And she felt bad that she had sold it because it had gone up further. And he said, aren't you worried about, the product cycle and all that? She says, oh, when the TV thing comes out, it's going to be huge. And I said, well, that's the type of thing that you get when people are falling all over each other to beat everybody else's price target.
And it's like those, FANG stocks.
I saw that this week. I saw that some brokerage house, a major one, suddenly increased markedly their price targets for, I think it was Amazon and Alphabet, I think it was 1,000 to 1,350. Both. That's what caught my eye. The target on both was ratcheted up from the same level to the same 35%.
On what basis?
Well, it seems weird they both be adjusted exactly the same amount. It's like when I turned bearish on Apple, it's because some guy came out and said it was going to 1,000, which sounds like an awfully nice round number devoid of any granular analysis.
Right.
But then another guy, just to not be outdone, came out and said 1111. Now I like 111 because it's two double lines, so I like that. But that's not analysis.
Yeah.
That's trying to grab a headline that you get your name out there for shock value.
Best move to short those stocks?
You can never short momentum like that. What happens is you're right, but first you get taken out at a 50% loss. It's like I turned bearish on the NASDAQ in 1999 in the end of the third quarter. I was so right? I mean, the thing collapsed. Unfortunately, it went up something like 80% or something in the next quarter.
Before you got there. Yeah. Jeffrey Gundlach, great to see you.
Nice to be here.
Thank you so much for joining. Don't be a stranger, please.